Hello guys, welcome to part 5 of True SMC from A to Z 2026 edition, and in today's video we will be learning how to identify high probability order blocks. And so without further ado, let's dive in. Alright, so depending with the market bias, we have two types of order blocks, that is a bullish order block and a bearish order block. So we'll be starting with the bullish order block, and it is the last bearish or bullish candle before a strong bullish displacement. As you can clearly see on this diagram, I marked this one here as a bullish order block as it is the last bearish candle before this strong bullish displacement. Okay, so here are the criteria to consider when identifying these bullish order blocks. Criteria number 1 is a valid break of structure. Of course, we start marking these order blocks after price has created or price has made a break of structure. And since here it's a bullish order block, of course it will be a bullish break of structure. Okay, so criteria number 2, it's actually a fair value gap, and as you can clearly see exactly right here, this order block or this bullish order block is associated with a fair value gap. Same with this one here, you can clearly see that it is associated with an imbalance. And the last but not least criteria, it's actually the liquidity sweep of the previous candle low. And you can clearly see exactly right here, this bearish candle took the low of this previous bearish candle low by a wick, and that would have been our order block. I mean, this candle would have been our order block, but it lacked one criteria, and that was associated with a fair value gap. And that's the reason as to why I shifted to this bullish candle, and that gives us the definition a bullish or bearish. So this means that it doesn't matter, that candle or that order block can be bearish or bullish. The color of that candle does not matter. Okay, so this is a bullish scenario, and by the way, the same with this other one here. You can clearly see that price took the low of the previous bearish candle, and you can clearly see this here was the order block, and you can clearly see it was also associated with a fair value gap. So this means that is of course a high probability order block. Okay, so now let's get to learn about bearish order blocks. And as you can see exactly right here, that a bearish order block is the last bullish or bearish candle before a strong bearish displacement. It's actually the opposite of the bullish one. And yeah, and you can clearly see exactly right here, this here is the bearish order block. It was actually the last bearish candle before this strong bearish displacement. Same with this other one exactly right here. You can clearly see it was also the last bearish candle before this strong bearish displacement. Like I said, the color of the candle, bearish or bullish, it actually doesn't matter. Okay, so the criteria to identify high probability order blocks in a bearish scenario, it's actually the same in a bullish scenario. The first one is, of course, the valid break of structure. Yes, we need a bearish break of structure before we start marking these order blocks. Yeah, the second one, of course, fair value gap. Yes, these bearish order blocks need to be associated with a fair value gap or an imbalance. Very, very important. Here, the keyword is must. They must be associated with a fair value gap or imbalance. And the last, of course, but not least, criteria is liquidity sweep of the previous candle high. Of course, this is high, and on the bullish side, it was low. So it actually depends with the market bias. And you can clearly see exactly right here, previous candle high sweep. You can clearly see that this bearish candle took out the high of this previous bullish candle by a wick. And by the way, that previous candle high sweep, it can be by a wick or by a body. It actually doesn't matter. So exactly right here, it was by a wick, and you can clearly see that was our order block, as it also met this criteria of being associated with a fair value gap. Same with this one here, we can clearly see that this bullish wick took out the high of this previous bearish candle, and you can clearly see again this here, the reason as to why I didn't pick this bullish candle, it is because it was an insider bar. It was engulfed by this bullish candle. So I picked this next candle, as also it is the one associated with the imbalance. Exactly right there. Okay guys, so enough with the theory part. Now let's get things practical by shifting to the real chart. Alright, so onto this chart, we can clearly see that we are in a downtrend, and so let's identify our current dealing range. Okay, so marking the market structure faster here, we can clearly see this inducement being taken out, price reversing back and breaking past this swing point low, so that makes a bearish break of structure. Again, you can clearly see price taking out this major inducement and then making a break past this low exactly right here, and we can clearly see then our high is this one, and currently our low is exactly right there. So we have identified our dealing range starts from that high all the way to that low. Alright, so first let's mark the order blocks present on this impulsive leg. So we can clearly see, if obviously we'll be starting from the top, and you can clearly see the first criteria is met, a bearish break of structure. The second criteria, we can clearly see that this one here is a sweep of the previous candle high, previous candle high, and of course this here is the order block because it is the one associated with a fair value gap. You can clearly see the fair value gap exactly right there. So I'll be using this color for the bearish one, so exactly right there, and you can clearly see it was mitigated, so this means I'll be shifting to this part, and you can clearly see that this bullish candle took the high of the previous bullish candle, and obviously we'll be shifting to the one that is associated with the fair value gap, and we can clearly see that this bearish candle was the one associated with that big fair value gap exactly right here. And by the way, the size of the fair value gap does not matter, wide or narrow, the order block still stands to be valid. And you can clearly see exactly right here that price mitigated this order block and gave that ultimate reversal. So you can clearly see that I didn't mark the order block that came before this inducement, our major inducement, because that order block is not valid but rather a smart money trap. If you have watched our previous video, you would understand why. Okay, so exactly right here, you can clearly see that this one here is now our current dealing range. And if I am to mark the previous, okay, so this one here is our, of course, major inducement. And I will continue to run price because I don't want to tire myself marking the order blocks before price has taken out the inducement. Okay, so continuing running price, we can clearly see, okay, so price created that another valid pullback below here, you can clearly see. So this means that our major inducement shifts exactly right there, and you can clearly see price has already taken out that major inducement. This one here is no longer our swing point, but our swing point becomes that one there. Okay, so now we have our swing point low and our swing point high. So now let's identify our order blocks. Okay, so starting from the top, of course, we can clearly see that this is the bearish candle that took out the high of the previous candle exactly right there. And after that, you can clearly see that it was not associated with a fair value gap. And the candle that was associated with a fair value gap was this bearish candle exactly right there. And we can clearly see that bearish candle was not an insider bar. Okay, so marking this this bearish order block, we can clearly see that it was already mitigated. So again, we can clearly see that this candle took out the high of the previous one. So this means that that becomes our order block. As you can see, it is also associated with a fair value gap. Like I said, the fair value gap can be mitigated, but it should not be fully filled. And you can clearly see that our fair value gap exactly right there, it was indeed mitigated, but it was not fully filled. And the size of the imbalance, it actually doesn't matter. Narrow or wide, the order block still stands to be valid. So this means this one here is our unmitigated order block. This mitigated order block is no longer valid. It has already served its purpose. So in this case, it becomes invalid, just like this previous one here. This one here is not valid. So you can clearly see this one here is our order block. Okay, so I'll be continuing all the way towards the low. So you can clearly see exactly right here that this one here was our order block exactly right there. But you can clearly see it was mitigated by this move down below here. So this means it was not valid. So you can clearly see this one here was our next order block. By now I want to believe you know the criteria, so I will not be repeating the fact that the order block needs to take out the previous candle high. So Yeah, you already know that. So I'll be just be marking the order blocks, and we can clearly see exactly right here. We have two valid order blocks, unmitigated, and they all meet our criteria exactly right here. The reason is why I'm not marking any order block below our major inducement is because it is an automatic SMT. So now let's see where price will be reversing from. So I'll continue running price. So let me do this, and if I continue running price, we can clearly see price has mitigated this order block exactly right there. And right, so you can clearly see it gave this rejection, that long wick rejection. Again, price came to this other one. You can clearly see it gave another rejection, but then price failed all of them. And this actually happens, guys, where price fails all the POIs available on that dealing range and makes a change of character. So yeah, you can clearly see now after the change of character, then this means that price has made a bias shift that is from a bearish all the way to a bullish. Okay, so now, of course, since we are now bullish, we'll be marking the order blocks that are on the impulsive move. Yep, and exactly right here, we can clearly see that this here is our inducement. So, all right, so I'll be using this one. Yeah, let me use that. Okay, so let me continue running price, and you can clearly see price has taken out that inducement. Okay, so that was pretty fast. So let me make it slow, and yeah, let me start marking the order blocks, of course. So starting from the extreme, we can clearly see that there was no any candle associated with a fair value gap until we achieved to this bearish candle exactly right there, and that creates our first high probability bullish candle. And for the bullishness, I'll be using this blue one. So you can clearly see exactly right there, price came, mitigated this. You can clearly see this long wick, and after the rejection, this means that our order block is already tested and it's no longer valid. So this bearish candle, this one here, it is the one that it is valid on this dealing range. We can clearly see that this bearish candle met all the criteria of a high probability order block. And like I said, we don't mark any order block before the major inducement or the minor inducement or before the inducement in general. So this means in this dealing range, we only have this valid order block. So I'm anticipating that price will be reversing from here. After all, if I am to mark the order flows, we can clearly see that this one here is our extreme order flow. So there is a higher possibility that price will be reversing from that place. You can clearly see that that was the extreme order flow. Exactly right here, we can clearly see that this one here was the order flow that price had already mitigated. So if it's mitigated, if you do remember, I usually use this color. Again, we can clearly see the next the next order flow also mitigated, and this was the order flow that was not mitigated, and we can clearly see inside it is our high probability order block. So I'm anticipating that price will be reversing from there. Okay, so now let me continue running price, and you can clearly see if I am to run price is actually reversing from that part, and ultimately it will be going all the way towards the break of structure. So price was consolidating a bit here, but eventually, let's see what price did. You can clearly see exactly right there, price made it to the external high, exactly right there. Okay, so we can clearly see a bullish break of structure exactly right there. So let me use this, this swing point to mark this high. So exactly right there, that's our swing point high, a bull swing point high. And this one here is our swing point low. So our swing point low is exactly right there. And is there any need for me to mark this? Okay, let me just do it. And exactly right here, we are in a new trading range, and we can clearly see exactly right here that this one here was our major inducement, and price has already taken that. So now let's mark our order blocks. Okay, so today it's all about order blocks, so I don't want to mark the order flows, but anyway, you can clearly see that this one here, this order flow, it's already mitigated. So onto this next order flow, you can clearly see that also the order flow is mitigated. So to this next one, exactly right here, we can clearly see that this order flow is sound, and not mitigated. So this here is our valid order flow in that case. Okay, so we know where our valid order flow is. Let me delete all of these. Let's mark our order blocks. So starting from the extreme, I can clearly see there is no any candle associated with the fair value gap here until this candle here. And this candle meets all the criterias of of a high probability order block. So exactly right there, this here is a valid, okay, so let me use this this color. So exactly right there, that's our bullish, our bullish valid order block. Like I said, let me zoom. Okay, so exactly right here, we can clearly see that this one here is the, all right, so you can clearly see that a narrow fair value gap there. I said that the size of the fair value gap does not matter. Narrow or wide, it does not matter. The full fair value gap was this one, but you can clearly see it was mitigated, and the imbalance left was actually this narrow part. And like I said, it doesn't matter. The size of the imbalance does not matter. Narrow or wide, it's actually valid. Okay, so back to our dealing range, and I can clearly see that if I am to go higher, I can see another order block exactly right there that meets our criteria exactly right there. And this order block is inside our, all right, so let me mark, all right, so this order block is inside our extreme, our valid order flow. So I'm anticipating a reversal from there, but let's see what price does. Okay, so we can clearly see, right, so price, you can clearly see it actually took some lows here, I think a core liquidity level below here, and gave that ultimate reversal exactly right there. So it happens sometimes price may not always reverse from an order block or an order flow, but rather after a sweep or after takeout of a core liquidity level. Okay, so exactly right there, we can clearly see that we have made a break of structure and we are in a new trading range. So we have that one there as the high, and of course this one here as the low. Wait, is this dealing range huge enough to confirm that to confirm that break of structure? Let's see. Okay, so if I drag my fib all the way to that area, we can clearly see that this retracement was exactly a 50% retracement. So this means that this one here is of course a break of structure, a valid break of structure. Okay, so exactly right there, we can clearly see again price took out the major inducement exactly right there. So this means we can start marking our P or I's. So if I'm to mark the order flow, we can clearly see that this one here is our extreme order flow and it's not mitigated, so it's the valid one. If I am to mark the order blocks, I can clearly see that this here is the order block associated with a fair value gap, but the order block that took out the previous bullish, that took out the previous bearish candle low, it's actually this bullish one here. It took out this this previous bearish candle low exactly right there, and this can clearly see if I am to shift all the way, so I'll be starting of course from this area, but since it's not associated with a fair value gap, I'll be shifting to the next candle. And if I shift to this candle, you can clearly see also not associated with the fair value gap, to this candle not associated with the fair value gap, this other one, until I get to this one, which is now associated with this huge fair value gap, as you can clearly see exactly right there. So we have our extreme order flow and our order block exactly right there. Up here, I don't see any other order block. Okay, so let me continue running price. And exactly right there, we can clearly see price mitigated our extreme order flow. And as you can clearly see, price is actually reversing. So I'm anticipating that price will head all the way to that high so that it can confirm that bullish break of structure. Okay, so let me continue running price. And as you can clearly see, price is heading higher and probably, okay, so let me make it fast. It's actually taking long before achieving to, but you can clearly see exactly right there, price made it to the external liquidity. So first, of course, let's mark our swing points. All right, so I usually like the neatness of marking these things. It's actually a good thing. So yeah, it's actually a good practice. So exactly right there, we have our break of structure, and yeah, this retracement is huge enough to confirm a strong bullish break of structure. So I don't need to measure that. And right now, I can clearly see that this one here is our major inducement. So yeah, let me run price until price takes out that major inducement. I don't need to tire myself marking the order flows on the order blocks. And exactly right there, you can clearly see price has taken out that. So now this is the time to mark the order blocks. Today is all about order blocks, but since we have already covered order flows, yeah, let me just do it. So you can clearly see this here is the order flow, the valid order flow, and yeah, and to the next order flow, you can clearly see it's actually this one. So this order flow is mitigated there. And this next order flow, it was mitigated by this bearish move. And of course, this here is our current order flow. And of course, the valid order flow. These other ones, they are invalid. And the color usually used for the invalid ones, it's actually this color. So let me use that color. And okay, sorry. So this here is the color of the invalid order flows or mitigated ones. And this one here is the extreme order flow, or the order flow that is actually valid in this case. Okay, so let's mark our order blocks. And I can clearly see, starting from this origin, I can see that this one here is an order block, a very strong order block, in fact, because we can clearly see that number one, it is on the extreme of the dealing range. And number two, we can clearly see it has already met all the criteria of identifying high probability order block. Criteria number one, a bullish break of structure. Criteria number two, a sweep of the previous bearish candle low. And criteria number three, associated with a fair value gap. And you can clearly see the fair value gap is there, huge and sound. So this means that this one here is a very strong bullish order block. Okay, so coming to this area, we can clearly see that this order block was mitigated. Even though it met the criteria, it was mitigated by this move. And so shifting to this next candle exactly right here, we can clearly see that this, even though it is the one that took out the previous candle low, it is not associated with a fair value gap. So what does that mean? I'll be shifting to this bullish candle that was associated with a fair value gap. And as you can clearly see, price has already mitigated that. So now let's see if price will respect this, because right here we only have two valid ones. Like I said, we usually don't consider this here as valid. And that's the reason as to why we usually wait for price to take out the inducement before we can actually look forward to mark these POIs. So this one here is already a smart money trap. And yeah, we don't mark that. So this means in this case, we only have two valid order blocks and our valid order flow exactly right there. So now let's see what price does from here. And we can clearly see exactly right there that price reversed from that order block. So that is good. And of course, this order block was inside this extreme order flow. Okay, so after that, we can clearly see price is extending higher, and probably price will be making the reversal from there. And you can clearly see price made that break of structure. So was this here a strong retracement? So let me do. So if I am to mark that, you can clearly see it was just a tap inside this. And since it has made it to the 50% retracement, then yeah, this here is of course a valid break of structure. So exactly right there, that is a valid break of structure. Yeah, and we have our new trading range with these ones here being our swing point, and of course this other one here. Okay, so now let us continue. Of course, start by marking our inducement, and we can clearly see that this one here is our inducement. Notice that the inducement I marked is this one here and not, it is this one and not this one here. Even though that was the recent, it was the recent formed valid pullback, we can clearly see that it was engulfed inside this order flow. So what does that mean? It was not a valid one. The correct one, it is actually this one here. Yeah. Okay, so let me continue running price, and you can clearly see price did that. Okay, so price has already taken out this low, and this here is a minor inducement actually. So if I am to mark the order flows, we can clearly see that this one here was the origin order flow, and it is already mitigated. So getting to this next order flow, we can clearly see also mitigated, and this one here is also mitigated. So in this case, we don't have any valid order flows. So this makes sense to just stick with the order blocks. And okay, so starting from the extreme, we can clearly see this is the order block that meets all the criteria of being called a valid, a high probability order block, and it is actually a bullish order block. And the only one or the other one that meets the criteria was this one, but we can clearly see it was mitigated. So again, we can clearly see this one, but it was after, it was before the minor inducement. So what does it mean? It was actually a smart money trap. So the only valid order block that is left with all the criteria met is actually this one here. And you can clearly see price has already mitigated that, and it's actually giving that reversal. Actually, it is a bullish engulfing candle. So probably that would have been the entry some few pips below here, because our low here is actually a major inducement. So price can come for that major inducement, and then of course we'll be targeting that external high. So this would have been a great trade. Let's see. Okay. Okay, it happens, guys. It happens, but that caught me off guard, actually. But anyways, you can clearly see that this one here is now a change of character and to the bearish scenario. Okay, anyways, so let me get rid of this. It's not showcasing any good picture there. Okay, so exactly right there, we can clearly see that price has made a change of character. So now we have shifted bias again to bearish. And yeah, so where is our minor inducement, or where is our inducement? Of course, we can clearly see exactly right there that this one here is our minor inducement. And yeah, let me continue running price, and we can clearly see price is heading higher. Okay, so let me make it fast, exactly right there. And has price already taken out our minor inducement? No, not yet. So let me continue running price. And yeah, so first let me make sure if this one here was a valid pullback below here. No, it was not a valid pullback. So our low, it was actually that one. So this means that that was the correct, the correct inducement. And in that case, it is a minor inducement. So price has already taken out the minor inducement. So the swing points, of course, we can clearly see them. So we have that high, and of course we have this low, of which now this is a bearish, a bearish swing point, because price has made a change of character. So this here is what we call a bear swing point. Okay, so if I am to mark the order flows again, we can clearly see that this one here is our extreme order flow. And in this case, this order flow is already mitigated, so it's invalid. And yeah, so the next order flow was this one, but it was before the inducement. And what do we know about this order flow? It is a smart money trap. We can clearly see exactly right there. Price gave that reaction, but then later failed that reaction. So even though this here was the swing that caused that change of character, you can clearly see it was created before the inducement. So in that case, price still failed it because it was weak. Okay, so this means that in this case, we don't have any valid order flows. So let's stick with the order blocks. Okay, so starting from the extreme, I can clearly see the order block associated with the fair value gap was this one. And we can clearly see it's already mitigated exactly right there. So I'll be shifting to the next order block. And from this extreme, I don't see any until here. So this is the one associated with a fair value gap. So if I am to do this, we can clearly see price has already mitigated that. Okay, so coming to this next one here, you can clearly see this also meets the criteria to be called a valid order block. Okay, so now we have two valid order blocks, but this you can clearly see price didn't even flinch there, so doesn't matter. So yeah, this here was another order block, and like I said, this is what we call a smart money trap. It is actually not a zone to give your attention towards, because it will eventually fail, or at least just know that it is a smart money trap. So exactly right there, we can clearly see price is giving that reaction. So yeah, you just need to wait for a good bearish reaction there, and you can clearly see that bearish candle, that pin bar gives that bearish initiation. And after seeing multiple bearish candles, probably it's worth it. Of course, stop loss above that high, and of course you'll be targeting this low. So yeah, after all, this here is the extreme one. I don't see any other order block above there. And if I am to run this trade, we can clearly see that this trade probably will be a winner. So let's see. Yeah, and you can clearly see exactly right there, price made it to the external low. Okay guys, so I just want to believe that you have learned a lot into this video. So in the next video, we'll be diving into POI identification, because not all of these order blocks, the ones that meet the criterias, like this one here, you can clearly see price didn't even flinch from here. And you can clearly see this one here, price actually made that reversal from there. So on the next video, we'll get to be filtering out these order blocks that, yes, they meet the criteria of high probability order blocks, but they are not strong ones, because we only have two strong order blocks. That is the extreme order block, as you can clearly see exactly right here. This here was the extreme. As you can clearly see here, there was no any other valid order block. So this here was the extreme, and as you can clearly see, it was just a tap and go from it. Again, you can clearly see this other order block here. This here is what we call a decisional, because it is the one that actually caused this break of structure, and price actually just made a tap and go from it. So these here are the valid ones. I mean, these two valid order blocks are the valid order blocks that we usually consider.